Ella Wheeler Wilcox.
Launches is that we've added support for Ripple. There's actually quite a lot of institutional folks that have Ripple, and so we're looking forward to starting to onboard some of those folks. There's actually quite a lot of them who want to hold with us.
Nathan McCauley from Anchorage Digital Bank is the first federally chartered digital asset bank. Anchorage is catered towards crypto, but has the same or higher regulatory standards. These types of institutions will be the go-to place for large crypto holdings by institutions that have to protect against risk. Nathan is flabbergasted by how many institutional clients hold XRP, so much so that he repeats quite a lot of them.
More on the down low. They're not. These are not the ones that are kind of publicly out there saying, "Hey, we have crypto positions." They're just using it as a way to diversify their treasury, keep it to themselves. Don't need to necessarily make a big fuss about it, but significant positions and a great trend. Especially exciting is the trend moving past just Bitcoin, looking to come into Ethereum and looking at other assets as well, and looking at how they can make allocations in that space.
So they're holding crypto in their treasury reserves.
That's right.
The last bull run, Bitcoin pumped and the alts were paired against Bitcoin. So the people that profited from Bitcoin rotated into the alts. That created alt season. Some will argue, since there are so many stable coin pairs and fiat on-ramps to alts, that we will not have an alt season. Listen to Nathan, he just told you. Nathan said large institutions are moving away from Bitcoin. They're depositing large allocations of all coins into his bank. What started this run was institutions buying Bitcoin. Nathan said the large institutions are buying alts. This is going to be alt season 2.0.
I want to go back to talking about Ripple a bit because, as you know, I've been outspoken about some of the reporting issues and discrepancies that we tend to see regarding XRP and its usage. This came up in a conversation with Daniel Vogel as well from Bitso, who talked about the corridor that they've basically built with Ripple to ensure that a sizable percentage of flows in the U.S.-Mexico corridor is actually leveraging the XRapid blockchain. And because Ripple has investments on either side of that corridor now between MoneyGram and then Bitso in Mexico, it is a channel that seems to be, picking up steam. Are there other types of entities outside of crypto exchanges and kind of crypto money transmitters that are in this cohort that are leveraging XRP? And is that the kind of target demographic, or is it still exchanges that are supporting the assets and other crypto players, I guess, for lack of a better term?
Yeah, it's a good question. So our bread and butter is supporting crypto investors. Mm-hmm. And so someone who has a crypto fund, they probably have taken LP money, and they're a number of general partners who are looking to allocate assets into crypto. And so we support those folks. And so at that level, it is sufficient for us to hear, hey, our clients want to invest in Ripple or any other particular asset. As a custodian, as an infrastructure provider, we do as much as we can to kind of take a hands-off approach to the assets that we support. Certainly do our due diligence and look at those kinds of things. Mm-hmm. But for us, our main clientele are the crypto investors themselves, rather than kind of infrastructure players. I do imagine that we will see more infrastructure providers start to use our platform over time as we start to roll out more features, say like an API and those kinds of things. But as of yet, our main clientele are the investors themselves.
Ryan Sykes has been an outspoken critic of XRP. His question is, are the companies Ripple bought, like MoneyGram or XRapid exchanges, Nathan's clients? Nathan says no. They are not infrastructure, i.e. crypto exchanges. These are institutional investors. Ryan was trying to get Nathan to say that the only clients Ripple has are the ones that they paid to use XRP. This backfired. Nathan clarifies that there is a lot of institutional clients investing in XRP that are not ODL partners.
So we're seeing a huge amount of interest from all kinds of participants on the Wall Street side, whether it's the buy side or the sell side. Large institutional banks looking to come in, looking to provide offerings, and very large traditional hedge funds looking to come in and start to allocate. Additionally, seeing large asset managers want to come in. So just kind of across the board, everybody looking to come in. One of the more interesting trends we've seen recently is corporates. I can't necessarily say who, but we've seen a number of corporates come in.
What size of corporates?
Billion dollar companies, several billion dollar companies coming in and wanting to borrow against their crypto positions. So they hold the crypto positions at Anchorage, maybe it's the Bitcoin, maybe it's the Ethereum, and they get loans on that, either from our lending program or from traditional banks where the crypto is held.
Wall Street, large institutions, and now big corporates are in crypto. These are the whales that control the charts. David Schwartz mentions in an interview that large corporates like Apple or Tesla have large amounts of money parked all over the globe, and they choose to keep that money there because there's too much friction to move it. Now, if large corporates are investing in crypto, do you think that they will have any issues utilizing crypto? When the regs are in place, when there is clarity, I believe large corporates are already leaning in and will be ODL customers, or whatever utility assets that have cost savings and enhance their business models.
DeFi protocols taking off. We have NFTs. We have this whole movement around DAOs. We have additional layer ones that are providing better theses for a world computer. And so as you start to look at kind of diversity of everything that's going on, think of the clarity of the regulations going to come in, plus the diversity of everything that's going on in crypto is going to be fundamentally very bullish for the whole space.
Okay.
I think it'll be quite the opposite of what happened in 2017. Look to be more bullish into the rest of this year and into early next.
The booms and busts of cryptos will no longer be a factor when we have utility.
I'll start with crypto. First of all, let's differentiate the two market segments as we see it. One is true cryptocurrency, like Bitcoin or Dogecoin, which are primarily assets held by people. They're not used much in the form of payments. We think of them as digital gold. And then there are digital currencies, including central bank digital currencies and stable coins that are directly backed by existing fiat currencies. And they're definitely emerging as a payment option. And they're running a public blockchain, which is really, in essence, an additional network, much like an RTP might be. So our focus is on 5 different opportunities that we see in this space. The first opportunity is really at the core of what we do, which is enabling consumers to make a purchase of these currencies or Bitcoin. And we're working hard with wallets and exchanges to just make sure we're facilitating acceptance in people's ability to use their Visa cards to buy. The second opportunity is enabling digital currency cash outs to fiat on a Visa credential, which then makes those funds available for shopping at any Visa merchant and gives immediate utility to the digital currency. Today, we've got over 35 digital currency platforms and wallets that have chosen to work with us. Thirdly, is enabling financial institutions and fintech partners to be able to have a crypto option for their customers. Fourth one is settlement. We've upgraded our infrastructure to allow a financial institution to settle in a digital currency.
Companies like Visa and Visa's partner, Earthport, that is also a Ripple partner, have invested vast amounts of money and manpower to the plumbing of this new financial system. During crypto winter, the builders were building and investing. Now the big players are setting up for utility.
Seems positive.
Yeah, we have SEC Chair Gary Gensler, who everyone thought would be very crypto friendly, but he has Coinbase in his crosshairs. Brian Armstrong went on a tweet storm, pretty upset about the way the SEC was handling things in his new crypto lending project. They're going to investigate Uniswap. I wonder how you see this regulatory crackdown, if you will, or this investigation or this exploration by regulators will pan out.
Yeah. I think the crypto industry at large has been very interested in looking for regulatory clarity. Whether it's clarity about securities laws, clarity about qualified custody, clarity about trading, and so I see a lot of the stuff going on at the SEC, a lot of these investigations as things will be very clarifying. And after that clarification process, I believe is going to be fundamentally bullish for the space because we're going to have clearer understanding of what we can and can't do, what needs to happen within the confines of various regulated entities, and it'll be more clear in terms of where in the world to build these services.
After years of inaction with Jay Clayton, Biden selects Gensler, and we're seeing SEC actions against Uniswap, Coinbase, etc. Regulations are being worked out for crypto, and after the dust settles, the institutions, big corporates, banks have the green light. I believe Gensler wants the SEC to have as much jurisdiction as possible and is targeting whatever he can. But Ripple has a war chest of XRP, is a top crypto company with deep pockets that hired Mary Jo White, ex-SEC chairwoman. It's possible the documents Ripple's defense is asking for can prevent the SEC from acting against smaller crypto companies. Do they pursue the Ripple case and risk losing jurisdiction for all other crypto cases? Do they cut their nose to spite their face?
Satoshi Nakamoto wrote her seminal paper, 8 pages, on Halloween night in the middle of the crisis in 2008. I don't think that's just by accident. It was like everything was falling asunder. And so it's competition. It's private sector competition with central bank money. But most central bankers I talk to aren't looking to shut it down. They're looking to adapt.
Central banks are facing debt crises, and crypto is a way to stimulate economies without inflating further. This is why central banks are not trying to stop, but to adapt.
Of a very dark nature. And when you look at some of the largest Interpol findings, it's absolutely obvious. So for all these reasons, I'm quite critical. Yes, that's true, and that's okay. I know that I'm going to instantly get this wave of what a horrible person to dare be against cryptos. Well, so be it. But if people are prepared to lose it all, you know, it's an asset. Okay. But it shouldn't claim that it is a currency. It shouldn't misrepresent itself, and it should not be allowed to deceive consumers. Now, a digital currency is something entirely different. To put it sort of simply, it's a bit like cash issued by the central bank, except in digital form. And in our current consideration and thinking about it, which is in its inception and will last a bit longer, it is not going to disintermediate. It is not going to do away with current banking and financing systems. It's going to be part of it, but it will certainly offer to customers of the digital euro, a CBDC, an alternative to cash, and one that will be cheaper, that will be more user-friendly, that will facilitate transactions in a simplified fashion. And it's an alternative. It is not going to substitute cash. I think that cash will still be around, and some people are very keen and attached to cash. But it's an alternative which has to be developed, because if a national central bank or regional central bank wants to be fit for purpose, it has to respond to the demands of customers. And we know that there are many customers who are saying, you know, I don't want to carry around banknotes. I want to be able to just use fiat money, guaranteed by the central banks, but in a digital form. And that's what we are working on. And we have to work to the two big chunks of, you know, additional work where we need to really develop the thinking, and that is climate change and how does a central bank contribute to the fight against climate change and protection of biodiversity? And second, how do we become more digital and more efficient and secure for customers?
A green economy means less oil. This is what dollars are backed by. Digital pushing for CBDC, a different form of money where it fundamentally changes the role of central banks as well as shifts money from the bank's balance sheet from debt to credit. Central bank digital currencies will amalgamate with cryptos to create solutions for the private sector to innovate. While the base layer is controlled by the central banks, Christine Lagarde has given us hints in the past of why cryptos are here to stay, but now she is saying you can lose all of your money with it. Is this because we are close? Do you remember when Brad Garlinghouse spoke at the 9th high-level conference on the International Monetary System Central Banking Summit? Lagarde attended that. She was in the audience while Brad was speaking. Why was the CEO of a crypto fintech presenting at a meeting with central bankers that run the economies of the world? There is no chance, no destiny, no fate that can circumvent or hinder or control the firm resolve of a determined soul. Thanks everyone, I hope you enjoyed the show. If you're not getting notifications, please try unsubscribing and resubscribing. Please take a moment to like this video and share it with your friends. If you're interested, I have a Patreon where I add these videos early while I'm putting the finishing touches on the YouTube version. I have Discord access, raw material for these videos, as well as a weekly chat.